Hello, everybody. I'm Bill Warner with Ontodot. Hey, I want to cover a subject that I am confronted with almost every day, and that's achieving revenue growth. Achieving revenue growth. It's a big deal, particularly for the small business world, which I mainly work in. It's a challenge. It's a challenge for any small business to get started in the first place, usually with one person, maybe two, maybe three, but more often than not, it's one person who has all of the responsibility of the company to get it started, to finance it, to pull any sort of team together. It all depends on their success. So the question is, how do I achieve revenue growth if it's just me? That's what I want to cover. But look, before I do that, I want to urge you to subscribe to the Onterdot YouTube channel. It's Onterdot on YouTube. That's what the name of the channel is. And you look for the playlist called Entrepreneurship in Action. And this will be the next one in there. I have lots of videos in this playlist that have to do with all sorts of challenges that startup companies face. So please join us on YouTube. If you subscribe, you'll also get notices of future live broadcast videos, as well as ones I produce just with me yapping at you. So please join us there. Let's get back to the subject at hand, though. But first, in this context of achieving revenue growth, well, let's define what we mean by revenue growth. You think that's simple, right? Revenue growth is simply the accumulation on a monthly basis over the course of many months and years, hopefully for you, the accumulation of revenue. The amount of revenue every month, and you want it to be higher. Every month you go along, revenue grows. It grows both cumulatively over some period of time, and it grows month to month. You don't want it to go down one month and down again the next month, then up. That's a business from hell. You don't want to manage something like that. Simply put, revenue is month to month, cumulative, and month to month revenue growth. It gets bigger. That's what you want. Okay, that's revenue growth. Often you hear people talking about a related subject called the scaling of a company or the scalability of a company. That is a little bit more complicated because it has to do with the ability of the company to be profitable, both gross profit as well as net before tax profit. Let me illustrate it with two different examples. The first example is an IT, information technology services company. It sells consulting services and software implementation services for its customers. Average deal is a few $100,000 because they're selling to mid-sized companies, something like that. Now, that company is going to get a good glob of revenue if they can knock off a $200,000, $300,000 deal. But in order to execute that, they need people to perform the services and people to develop the software for the customers. So there's a lot of what in the finance world they call costs of goods sold. The cost of goods sold in a services business is the people that perform the service. And I have to tell you, having been in services businesses and all sorts of different kinds of companies, your gross profit margin on services business is maybe 30, if you're lucky, 40% of revenue. Not that great. Worse yet, every single implementation is a unique implementation, unless you've got some repeatable, reusable software assets, which would be smart of you to accumulate. But at the start, it's every single deal is a unique thing. It takes about the same number of people every time. So it takes some number of people for the first deal, yet another set of people for the second deal, and yet another for the third deal, until you reach maybe the fourth deal, and you can use the people that were on the first deal to perform that one. But you see what's going on? The expense for people progresses and grows right along with the revenue, and it's a large percentage of revenue. Investors look at that and they cringe. This is not a very scalable company because it takes so many darn people to fulfill the customer need. Second example is a simple software company. or a phone app, another simple piece of software. It's made once. It's made once. You test it out and it works, and you sell it many, many, many times. The same darn thing. That one thing sold many, 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 many times. And the financial dynamics of that are that you probably spent a considerable amount of money, could be 40, 50, $100,000 to develop it in the first place. You had to get the financing for that, but now smooth sailing. Every time I sell this, the cost of goods sold for a piece of software is somewhere between 3 and 5%, because there's no people involved in this. You give them a copy of the software and they're off and running. And then the operating expense, once development is done, is also nominal. So now you're looking at a business that has really high net profit margins. Could be 50, 40, 50, sometimes 60% for a really, really good software company. Now, investors look at that and say, oh my goodness, look at this. For very few people, I'm going to be able to have a lot of revenue accumulating month to month to month. Revenue is going to grow. And I don't need a whole lot of people to cause that to happen. So it's very efficient. That means they'll accumulate a lot of cash over time. If after 3 or 4 years and they've saved their cash and they're now looking at a cash balance of 10, 20, $30 million, investors look at that, or M&A people look at that and say, my God, we want to buy that company. Look at all that cash. Look what we can do with that, merge it with other companies, and all sorts of wonderful things. And they get a valuation of $50, $100 million to buy the company because it was a very scalable company. Now, that's a long-winded explanation, but when you hear these terms, revenue growth and scalability, that's what people are talking about. Either way, you want to grow revenue, and there's a certain amount of challenge to doing that. So I'm going to stay with the small business world and talk about, well, if you're a one-person company, which is the way you're going to start, if you're lucky, you'll have another founder or two, maybe not. But whatever it is, you've got to figure out how you're going to start with one person, with whatever the nature of your business model is. You sell enough of it, so you start accumulating some cash and early on. So these early transitions, I call them, start with some outsourcing. So let's imagine you're a one-person company and you're predominantly a services business. You provide a consulting service, maybe for business development or something like that. And you got it all, your marketing, your sales, and your implementation. You're the person who's going to perform the service. So you're going to structure a deal where you get a substantial amount of the money you are going to get from your services engagements, maybe a third to a half of it upon starting the engagement. So you get some cash in the company so you can pay for yourself and pay for some help that you might need along the way here. Better yet, you can accumulate over 2, 3, 4, 5 deals that you're going to cook. So this first transition is that you are going to reach a point in time where you have sold about as many of these services deals that you can handle. It's not uncommon that your limit could be 3 to 5 services engagements before I'm out of gas. I can't do anymore. Well, the first thing you start looking at is what are all the things that I'm doing that could just as well be done by someone else? The usual suspects are accounting, marketing implementation services, but things that you're paying for that are not in the main line of your services business or your software business in the case of a software company. And since you're bringing some money in, you're going to pay outsiders under subcontract to your company to perform some of these other tasks that you have to do, and you're going to have them do it instead. And you pay them. Simple as that. Outsourcing it. What does that do for you? It enables you to have more time so you can close more deals and do more implementations if that's necessary. But you've got to do this in a balanced way. You've got to close enough deals and accumulate some cash so you can pay for these guys here that you're going to bring in to offload some of the work that you're doing that could be done by outside parties with specialized skills. That's outsourcing. And that's how it helps you scale and grow your revenue. The other thing you look at is the key hires. I call them that, but they could key consulting engagements. These are much more highly professional people, more like you, that are able to perform the service offering under your methodology, or they could be selling software and hardware to customers that you had also been doing, but they have the skill and the background to be able to do this just as good as you. So you're going to hire some very good people to carry out the engagements, your future engagements, that you would have otherwise had to do yourself. You've reached your limit. I can't do anymore. The only way to grow it further is get more people that can do what you do in terms of sales and performing the services for the customers that buy into your services and to your products. So you need key hires, but you do this in a special way. I probably shouldn't have used the word hire because I've now probably confused you a little bit. I'm sorry about that. But you're going to identify people that can perform your service, and you're going to subcontract to them initially. Unless you're very, very fortunate. You have 4 deals to have them start working on right now, which is terribly unlikely because they're going to come in one at a time. And secondly, you want to see how they perform. I'm kind of a try and buy kind of person. And you're going to bring in people and see if they can actually do what you do and hopefully better than you. That's what you'd like to see. So the second key transition is bringing in enough money for a big software contract or big services contract, get some of it up front, 30 to 40%, like I said earlier. That gives you money to pay the subcontractors that you're going to need to actually perform the services. So you take in more money and you can grow more people. You keep growing it, in a balanced way, which gets me to my last point. And I've used this term several times already. This whole thing has to be in balance. You can't get out of sync with yourself. You can't go out and win deals and win deals and win deals and have nobody to perform them because you have no money to pay them. So you got to win deals, get enough money from winning the deal so you can pay for others, either as outsourced subcontracts or better yet, later on, people that can actually perform the service. So you grow more deals, collect more money, get as much upfront as you can so you can pay the people to grow revenue because you can win more deals and it keeps on going. So there you have it. So the message here that I want to tell you is you achieve growth by winning deals and growing the revenue, collecting money earlier, be scalable in so doing, make the transitions that are necessary for the point in time you're in, and maintain the balance going forward. That's it. Simple, huh? Well, since this was done as a live broadcast, we do have a few questions here. This wasn't as simple as I thought it was. The first question is kind of an obvious one. Where does the initial money come from? How did those go started in the first place? Out of thin air or what? He didn't quite say that, but I'm sure that's what he meant. It came from you. Unless you had an investor or somebody you could borrow the money from that could get you started in the business. I've said for a long time, and you'll see it in all my videos for the last 2 years, starting a business is not a free proposition, despite what some wackos will try to tell you. It takes money to get going in the first place. So you can fund it yourself. You can go to friends and family and borrow some money. Worse yet, you can go to some investors and try to borrow money from them. But if they want equity, then you're going to have to pony up and sell some of your company. I hope you don't have to do that just to get started in the first place. So that's where the money comes from. There's no free money out there that I know of. you're too way too early to go get grants, and that's not really the world of small business anyway. The next question is something comparable. Where the heck do we find these people? You see, I think he's referring to, I talked about key hires, I talked about outsourcing and talked about consultants. Where are these people? Well, when you started your company, I hope that you had a certain amount of seasoning behind you. So it's not your first rodeo. You didn't step out of college and try to start a business, although some people do that and some are quite successful at it. But that's rare. In the small business world, you're probably 15, 20 years into your business life. You've accumulated some knowledge, maybe you've accumulated some money that you've set aside, and you'll have the money to pay people, and you'll have the contacts throughout the industry because you've followed a lot of people on LinkedIn and on Facebook and other social channels. So you have accumulated a number of people that you have relationships with. Those are the ones you go back to for subcontract work and perhaps hiring them later on as the business requires and as you're comfortable in so doing. That's it, huh? The next question is, how do you keep track of all this? I think this person is thinking of subject like customer relationship management software, tools perhaps for monitoring the progress of sales, well, including marketing and sales. So tracking the progress of this balance. So I urge you to take on a CRM that has capabilities of keeping track of the status of every single customer relationship you have, every single lead that you have that could lead to a customer engagement at some point in the future. Keep track of all this stuff. Use their task management system to follow up with them in a rigorous way. Know where you're efficient. Know how to spend money wisely on the act of marketing and selling. Don't spend more on marketing and sales than you're going to take in for revenue. Believe it or not, that's a subject we often talk about, that we get way out of line on some of that stuff. I think the last question here is one about, well, you've got to pay for marketing and sales, don't we? I said, yes, you do. Yes, you do. So this whole thing about finding the customers in the first place did take some money in marketing programs, whether they're email campaigns, whether they're a combination of that and social media posts and things like that. You do need a website. That's going to cost you $3,000 to $5,000, depending on the complexity of what you're trying to do and what you're trying to sell. So you're going to need some money for that, big cash outlay at the beginning of your company, and then marketing and sales commissions and sales bonuses and things like that you pay for, but mostly out of the revenue that you collect. So that's it for the questions. There are many others, but I've covered the answers to them already. So there you have it. Keep your life in balance and keep your business in balance too. And if you do that, you're going to have a great day.